Looking forward to working with each and every person on today. Let's get this party started. I am live on Facebook and I am live on YouTube as usual. And regardless, whether you are listening in on YouTube or whether you're listening in on Facebook, make sure you go to the YouTube channel and subscribe. All right. So, ladies and gentlemen, on today, once again, welcome to Coach Steele's Finance Training. And I am Coach Steele. And of course, we here at Coach Steele's Finance Training, we love talking about and discussing financial literacy. We talk about all things financial literacy. Good morning to my beautiful wife, Yvette Steele, on today. And we talk about all things financial literacy, right? But we take the complicated things and we simplify them. We make it simple so that everyone can everyone can understand or get a grasp of what's going on when we talk about these different subjects of financial literacy. Sometimes things can seem so complicated, but they're really not. It may be the vocabulary, it may be the language that people are using that makes you feel excluded from a certain environment or group or section or company or organization. But if you learn the vocabulary or if the vocabulary is defined in a way that you understand, it can take those complicated things and simplify them and relate them to things that you yourself can understand. So I welcome each and every person and happy to have you tuned in on Coach Steele's Finance Training on today. And as you hop in the room, make sure you greet me, make sure you meet me, tell me hello, something, speak to me. And of course, I do my best to try to say hello back. And also, ladies and gentlemen, as you're tuning in on today as well, you can always share the live as well. Share it with someone else. So, what is our subject? What is our conversation on today? Well, we are talking about Fannie Mae and Freddie Mac part two. There's some more research and a little more conversation that I want to have about these two entities here. I think there's something interesting, very interesting going on under the radar that many people aren't talking about when it comes to the real estate market, and most importantly, when it comes to Fannie Mae and Freddie Mac. Like I've told you all many, many times before concerning, I can't say many times, but like I've told you all concerning these companies. Good morning to you, Mr. Tony Sherman. Appreciate you tuning in on Coach Steele's Finance Training. With these two companies, there's something going on here. Last week, I showed you their chart. I'm going to go over their chart again this week, and I'm going to dive and do some more research. So the cool part about Coach Steele's Finance Training, when we talk about Fannie Mae and Freddie Mac on today, I'm basically going to kind of like while I'm right here in front of you, I'm going to be doing research and looking up to see what I can find about these two companies myself. Do I know everything? No, I don't know everything, but I think I'm on to something. And I think a lot of people are on to something when it comes to these companies and what's going on with these two companies in the marketplace. So as we are tuned in on today, that's what we're going to go over. You're going to see me do some more research in real time. Hopefully I can do this without too many mistakes, but we'll see what happens. All right. And of course, I have my TikTok family here with me on today as well as we go through this. So good morning to you, Miss Vicky Billingsley. Happy to have you tuned in as well. And good morning to you, Mr. Richard Smith Jr. Thank you for tuning in. Now, he says, good morning, my guy. We were just talking about financial literacy the other day. We got to continue that conversation. So when we're talking about Fannie Mae and Freddie Mac on today, guys, and we're talking about what is going on in the real estate market on today, we have to be tuned in to what's really going on in this real estate market. Good morning to you, Youth Pastor Trotter. Happy to have you tuning in as well. And as I go over what's going on with Fannie Mae and Freddie Mac, I want to hear y'all's thoughts and concerns. And normally I would go into some definitions and try to help you all understand what's going on. But I just want to go to the chart real quick, and then I'm going to come back to the chart. So I was going to save the chart for last, but I just want to show you all why my antennas are up about Fannie Mae and Freddie Mac, because I don't want to miss out on money that can be made if it is possible. So if you're tuning in to Coach Steele's Finance Training on today, we're talking about Fannie Mae and Freddie Mac. And I'm going to make this larger for you all so that you can see what I'm talking about. If you're on TikTok and you can't see the charts that I'm going over, then you can definitely jump over to my YouTube channel, Coach Steele's Finance Training, subscribe, and you'll be able to see the charts that everyone on Facebook and YouTube are looking at as well. So, all right, check me out. Look at this. Now, if you have looked at the charts for for Fannie Mae and Freddie Mac, and that y'all should be able to see on your screen. And as you see right here, this is the past 5 days of Fannie Mae, of what's been going on. I told you all when I talk about Fannie Mae and Freddie Mac, it sounds like, somebody's great-great-grandmother and great-great-grandfather, these two names. But, I mean, they're old enough to potentially be that, at least one of them. So, and last week I talked about the history of these stocks and where they come from. When we look at the past 5 days, we see Fannie Mae is at $13 and some change, and then it went up, spiked up to about $15.80, and now it's back down to $14 and some change. That doesn't raise a red flag for me. Now, when we look at the past 3 months, let me make sure you all can see the past 3 months. Now, when we look at the past 3 months, we look over here and we see $7 and some change down here at the bottom area. We go over here, we see $9 down to $7. Then, as you see, it goes up to about $11, and then it goes back up to that $14, $15 range. Okay. Now, if somebody saw Fannie Mae, a stock, that's the stock symbol, FNMA. If somebody saw this go from $7 and some change and doubles to $14, that alone should make you say, wait a minute, how can I get in on this? How can I make some money off of this as well, off of this investment? Like I told you all, in real time, I'm just doing research, due diligence like you all. And at the same time, I'm going to show you why this thing is interesting me and piquing my interest at the same time, right? So years ago, back in 07, 08, there was a market crash, and Fannie Mae and Freddie Mac, they were too big to fail, so the government bailed them out because their shares used to be like $60 and $80 a share if you wanted to buy a share on the market, right? So y'all hear me out. Then all of a sudden, now let's go to a year to date. Year to date, if I go back, if y'all looking at these charts, hopefully y'all can see what I'm showing you here. On the far left, when we scroll down, it says $4.64. So years ago, long time ago, guys, as you're tuning in to Coach Steele's Finance Training, when the stock market crashed in 07, 08, eventually, and there were issues in 09, Fannie Mae and Freddie Mac went OTC, over the counter, and their shares became like $1 and some change. Sometimes it was less than $1. Sometimes if you wanted to buy a share of Fannie Mae and Freddie Mac, it might cost you 96 cents a share or something like that. It became very cheap, very affordable. And so back then, if anybody, whether you're on TikTok, whether you're on YouTube, whether you're on Facebook, if any of you all bought any shares of Fannie Mae and Freddie Mac in 07, 08, you know exactly what I'm talking about. There was money to be made in the market. And so I would make money, hundreds of dollars. Sometimes I'd make a couple thousand in a day, just trading these two companies, Fannie Mae and Freddie Mac, because the market, it got shaky for them during the 07, 08 crash. The value went from $60 to $80 a share. It dropped down. They used to be like $30 a share. Boom, dropped down. And so I noticed a pattern in the market when it came to these two stocks. And so before they became OTC, when I noticed that pattern, I would buy some shares, then sell them. Buy some shares, sell them. You could buy them the same day, sell them the next same day, and make a couple $100, maybe potentially make a couple $1,000. It was easy money. And so what happened is after I made money off of it, I just left like over 1,000 shares, about 1,000 shares together combined. So I might have 600 shares of Fannie Mae, 400 of Freddie. And so I just left a total of 1,000 shares in there just in case these companies ever made it back to $60 to $80 a share. Because I knew back then, 08, 09, that was an easy $60,000 or $80,000 profit to be had on my part if these companies ever got back in good standings. And so I'm interested in your thoughts, your comments on today. Have any of you ever heard of Fannie Mae or Freddie Mac? Have you ever heard of these two companies? And have you ever invested into these companies? Do you know what these two companies do? Do you know what their job description is? What it is, the purpose of these two companies? And so I'll go a little bit further and I'll tell you some information, and I'll go back to the chart as well. I'll go back to the chart real quick, and then I want you all to see not just year to date, but let's go over the past year. All right, when we go over the past year, and I want to make sure that you all can see it. Let me move this over so it's large enough for you all to even see if you're looking on the phone. All right, so we're going to look at that November timeframe, November 2024. Yes, y'all see this chart, November 2024, and it continues to excel. It continues to go on an upward trend here. All right, November 2024, it says that Fannie Mae was $1.34 a share. Okay. FNMA, Federal National Mortgage Association. Fannie Mae, November 2024, $1 and some change, like I told you all before. Now, when we look a little bit further as we go, how did it go from $1 and some change? Now, if I go back, this is cool because you all can see what I'm talking about. You know, I'm not making it up. As we go back, we see it's $1 and some change for a while. So all of 2024, Fannie Mae is $1 and some change. I asked you all last week, why in November 2024 did Fannie Mae go from $1 and some change and begin this upward trend that we see? What do you all think happened in America that caused Fannie Mae to go from $1.24 a share to now being $14 and some change? Okay, we got Tasha Trotter saying she's heard of them. We got Tony Sherman saying that he's heard of Fannie Mae and Freddie Mac. What happened last year in November 2024 that you all think would cause this company to go from $1 and some change to now all of a sudden this mortgage company, or whatever we want to call it, is now worth $14 and some change? And the other company is worth, I think, $13 and some change. This is just Fannie Mae. There's also Freddie Mac. So Fannie and Freddie have shot up from $1, boom, to around $14. Mr. Tony Sherman is correct. So a presidential election. And so what I want to look at is, what did the presidential election and who's in office, what it had to do concerning this company, and why all of a sudden it has shot up. This is so good because we got to be educated on what's going on. We have to be educated on what's going on, because if we're not educated on what's going on, we can miss out on money-making opportunities. So as you tuned in to Coach Steele's finance training, we got Tasha Trotter. She said the housing market went up. In November 2024, it's not that the housing market went up. It's about potentially who came in office and what his plans are for Fannie Mae and Freddie Mac as to why these companies and the value of them are shooting up like crazy. And so if you're tuning in to Coach Steele's finance training, can you imagine if you had invested, like, let's say Fannie Mae and Freddie Mac was $1 a share, which we know it was. I just showed you. And let's say you put $1,000 in there and it went to $2 a share just that quick. Guess what? Now you have not $1,000, you have $2,000. But this thing went from $1 to $14. Some of you who had $1,000 could have potentially went from $1,000 to $14,000. But what if you'd have put $2,000 in there? Guess what? That's from $2,000 would have went to $2. That's $4,000. Do the math. You double up. That's $28,000. Just that fast, wealth could be increased. But do you have access to these companies? Could you buy shares of this company? They're over the counter. These are the things that we need to research. These are the things we need to look at and figure out, how can we get piece of this pie? How can you take advantage of a company that is growing in value? The shares are going up. Why? Do we have access to them? If we do have access to buy shares in Fannie Mae and Freddie Mac, can we do it? Why don't we? Or if we don't have access to it, why don't we have access to Fannie Mae and Freddie Mac? Now, years ago, you could get shares of Fannie Mae and Freddie Mac. I bought shares, like I told you all, made thousands of dollars, but I left a few shares in there, about 1,000 shares total. Because I said, if this company ever gets back on track, because it was bailed out by the government, I want piece of the pie of when it goes back to $60 to $80 a share, because that's $60,000 to $80,000 that I have potential to make. So I want y'all to keep up with what I'm doing and what I'm saying, because here's the thing. We talk about the presidential election and how this company has increased. I'm going to share my screen again. Let's see. I want you all to understand what an IPO is, because for me to explain what's going on with Fannie Mae and Freddie Mac, I think it's important that you know what an IPO is. Now, on this screen, it says, let's see if I can make it a little bit larger for those that are tuning in. And of course, for my TikTokers, I'll read it out loud to you as well. Or if you're on TikTok, you can always go to the YouTube channel and see the screen that I'm sharing on Coach Steele's Finance Training. Make sure you subscribe. An IPO, or initial public offering, is the term for the first time that a private company sells shares of its stocks to the public on a stock exchange, right? The event means that the company has transitioned from private to public ownership, which means we can buy shares, which is why an IPO is often referred to as going public. When a company goes public, we have access to be able to invest in that company. It's new growth, for example. It's an opportunity for a company to raise significant capital to help it fund new growth, for example, or pay off debt. And it allows private investors like founders, angel investors, and family members to cash out. So now, you all know what an IPO is. Well, now that you know what an IPO is, you can understand, and I can explain to you why I need you all to understand what an IPO is and why it matters when it comes to Fannie Mae and Freddie Mac here on Coach Steele's Finance Training. I already showed you all this. Company is growing. It was at $1 and some change in November. Trump goes into office. Now it's up to about $13, $14 a share. Went all the way up as $15 a share. If you put $1,000 in there, you would have $15,000 value now. Well, you know what? One thing I didn't show you all is what the company used to be worth. I told you, but I didn't show you. And so I guess I could show you better than I can tell you. Let's look at the max. Okay, I'm pretty sure you all can see this. This is good. Let me make sure that you all can see. Boom. Now, you all keep hearing me talk about how this company used to be worth like $60 to $80 a share. Let's see here. We see in March 1999, it was worth $70 a share. We see in January 2002, it was worth $81.35. Then we see in 2007, this is when I talked to you all about the market crash. It was worth $61 a share. It went from $61 a share. Check this out, guys. Down here. Boom. $1.15. And so what I was trying to explain to you all, as that thing was going up and down, I was just making money off of it during that time frame because it was just going up and down, up and down. I found a pattern, I found a system, and I was just selling shares, buy, sell, buy, sell. Left 1,000 shares there. So you all see what I'm talking about. And this is why I want you to understand that. What if this company goes back to $80 a share? We have an IPO. Now, when the government had to bail out Fannie Mae and Freddie Mac, they put a conservatorship on it. They took control of Fannie Mae and Freddie Mac. When they took control of the company, it limited what they could do and what they were capable of. It's like the government was their daddy. And so they have to answer to daddy because they were bailed out by the government. They were too big to fail with these mortgage-backed securities and different things that they were selling to other investors. I want to go in more detail about it, but I don't want to waste a lot of time on it. Let me see if I can share you some more information with you all. All right, let's see. Boom. Okay. I don't know all of these people, but I'm going to read this information. Lutnick hints at Fannie Mae and Freddie Mac IPO in 2025. This is why I went over the definition of what an IPO is. In other words, Fannie Mae and Freddie Mac might go public in 2025 to show the market worth to American taxpayers and could potentially be the largest IPO in history. So what is it saying? I'm telling you all this because when the government took over Fannie Mae and Freddie Mac because they were too big to fail, it's basically saying that now the government, Donald Trump is looking at potentially allowing Fannie Mae and Freddie Mac to go public from over-the-counter, OTC, to going public sooner than people think. Now, with that, all of a sudden, we start seeing that the worth and the value of this company is going up from $1 and some change to $15. Watch this. Yahoo Finance. Trump admin aims to keep mortgages low amid GSE IPO talks. Government Secured Enterprises, GSE, that's what that means. In recent interview with CNBC, Lutnick mentioned the potential for a public offering for the government-sponsored enterprises. So, government-sponsored enterprises, GSEs, Fannie Mae and Freddie Mac, he explained that the government is considering this move to showcase the value of these assets owned by American taxpayers. Now, there's some more that goes into this. Lutnick clarified that the aim is not to sell a lot, but to demonstrate a Mark II market showing the American taxpayers the value of the assets they own. He emphasized the Trump administration's commitment to keeping home mortgage prices as low as possible, stating that any action that raises the spread would be avoided. The focus is on making home ownership easier and more affordable. This gets very interesting because if Fannie Mae and Freddie Mac go public, and it could potentially be the largest IPO in history, when it goes public, and now it's already at $14, $15 a share, and people start buying shares, when asked about the U.S. government's 79.9% ownership, Lutnick refrained from providing specific details at this point, citing his obligations. However, he did hint at a potential deal being struck and the company going public, which could potentially be the largest IPO in history. It could well be this year thing. So this is interesting. Now, when we look at all of this, if it is possible that this company could potentially go public and the values are already, the value is already increasing, there's potential money to be made. I don't know if anyone is seeing what I'm seeing. Yes, Tony Sherman missed out on fortunes of money in '07 if you had bought in and stayed in till now. It's possible. So what I did was I made my profit and I left a little bit in there. And I left about 1,000 shares in there. So now my 1,000 shares combined are probably worth about $13,000 or $14,000. I'm not talking to you all from someone who is, how do I put this? The research I'm doing, I'm learning with you all in real time. But I've made money off of these companies already. But I'm trying to figure out, is there a way for other people to make money off of these companies as well? And if so, before the companies increase in so much value, is there a way to bring awareness to everybody so that they can jump in sooner than later so that they can make money as well? So let's see if I can do this. Okay, I'm going to try something here. I'm going to share my screen. I told you all about Fannie Mae and Freddie Mac. So if you're looking at my screen, you see FMCC, that's Freddie Mac, and you see FNMA, that's Fannie Mae. So back in the day, I used to buy like penny stocks and stuff and try to make some money trading during the day and things like that. But as I told you all, I have a total of about 1,000 shares. So everything I'm telling you is truthful. You see that right there, 620 plus 400, that's 1,020 shares. You also see on the screen that Freddie Mac is worth $13.50. Fannie Mae is worth $14.64. All right, now, if I have 1,020 shares, then that means if they're worth $13, $14 a share combined, I should have a total of, let's see, $13, $14. Y'all do the math on that. Let's see here. There we go. That's the total value right there. So if it's $13, $14 a share, and let me share my screen with you all again. I'm trying to make sure I share my screen, but try my best to be as careful as possible not to put too much information out there. Now, so if it's $13, $14 a share, I should have $13,000 to $14,000 profit shown. So you see right there, $8,370, $5,856. So that is from the shares that I own in that company. Now, of course, I'm in early, so if it were to go up to $60 to $80 a share, or if it's going to be the largest IPO in history, I don't know what it may go to. I hope it goes to $500 a share. I got 1,000 shares. Do the math. So all I'm saying is, if it's going to be the largest IPO in history, and we have to continue to do research on this, that's why I did the live last Saturday. Everybody who's tuned in to Coach Steele's Finance Training, I go live every Saturday morning, 9 a.m. Eastern Standard Time Zone on my YouTube channel, Coach Steele's Finance Training, because I think this is something we need to pay attention to. When Lutnick says that they may go public by the end of this year, and if it's going to be the largest IPO in history, like let's say they do go public, then how much are they going to be a share? And how many people are going to jump in and dive in on this early? How many people won't realize or find this out till 2026? Clearly, Donald Trump is trying to, how do I put this? Clearly, he is trying to figure out this puzzle as well. Now, how this affects the economy or how it affects the real estate market, everyone has their own thoughts on how it will affect the market. But I think Fannie Mae and Freddie Mac are interested in this. And of course, I do believe it benefits the government greatly, especially if they own 79.9%. Mr. Sherman, if you find a way to buy some shares, maybe you can come back and let everybody know. Because there's certain platforms that won't even allow you to buy shares of this company. And like I said, here, Coach Steele's Finance Training. Do I know everything? No, I don't know everything. But I want to put this information out. So years ago, when there was this crypto coin called Dogecoin, I think it was out for a while. But I started buying shares of it. It was less than a penny. It was like a fourth of a penny. That was the value of it. And I just started buying shares here and there. And I've shown that example and talked about this on Coach Steele's Finance Training before. And so I just kept buying like $5 here, $10 here, $20 here, just randomly buying little shares here and there. To the total where it ended up being like I had $300 invested in Dogecoin in 2018, 2019. The pandemic happens, and then like 2021, all of a sudden Dogecoin went from less than a penny to eventually it hit a penny. Everyone went crazy. Then eventually went up to like 70 to 80 cents a share. Well, I bought it less than a penny. And I had put $300 in it over a period of time because I recognized, and I said, what if? There's potential for this thing to go up. And it did. And so I ended up making well over $20,000. I took $300 and made well over $20,000 in profit when it came to Dogecoin. When you look at this company, Fannie Mae and Freddie Mac, and this rise that's happening, I showed you all I have the shares. Could I sell my shares right now? Yes, I could. And I could walk away with $14,000 to $15,000. But I already made my profit on Fannie Mae and Freddie Mac years ago. So I know it sounds crazy because I'm saying I do want $15,000. But I don't want to settle for that if it has potential to be the largest IPO in history. I don't know what may happen with it. They may try to find a way to, buy out. I don't know if they can find a creative way to get me to where they sell, our shares or close things down or whatever. To people that are still invested, I don't know if they can creatively find a way to get us out of the way to where we can't make the profit if it goes up. That's something to think about. But I would rather hold my shares just in case. That's what I'm trying to say. Same thing with Dogecoin. When I went from $300 to over $20,000, I could have sold at 1 cent and made, whatever I could have made. I didn't want to settle. I wanted it to see how far this would go. So when it comes to Fannie Mae and Freddie Mac, and now that Trump is in office and Trump wants to do something with Fannie Mae and Freddie Mac, that means there's money to be made. And if there's money to be made, I'd rather hold on and wait and see what the end's going to be, as opposed to just pulling out and taking the $15,000 now. Nope. Go ahead. If y'all going to go back up to $60 to $80 a share, I want to be along for that ride. If it's going to go to $100 or $1,000, whatever it is, I want to be along for the ride to see what happens with Fannie Mae and Freddie Mac. And here at Coach Steele's Finance Training, we've talked about Fannie Mae and Freddie Mac the past 2 Saturdays. And will I talk about it next Saturday? I don't know. It depends if there's some new updates or something going on. Some people believe that the IPO happening for Fannie Mae and Freddie Mac, if it does happen, it will have an effect on the stock market, not the stock market. Well, it will affect the stock market, but they believe it will affect the mortgage market, real estate market. They don't know if it'll have an effect on interest rates going up or down and all of that other stuff. But I wouldn't care so much about that. What I would focus on is, how do I buy some shares before this thing shoots through the roof? I'm not an expert when it comes to the stock market, so do your own research, conduct your own due diligence. And of course, as you all are tuning in to Coach Steele's Finance Training on today, another way that you can support Coach Steele's Finance Training, guess what? You can go to my website. Boom. And let me show you what we have on the website. Of course, you see on the website, you see right there, there's a t-shirt and it says Make Money Multitask. You can buy yourself a Make Money Multitask t-shirt. And if you don't like white, it comes in different colors. Boom. You can buy in multiple colors as well. Let's see if I can show you another example of a different color. So definitely go to my website. What is my website? It is Steele's Academy, Steele'sFinanceAcademy.com. And of course, that's down there at the bottom of the ticker. Let me make sure it's down there. You can see it down there at the bottom ticker, www.Steele'sFinanceAcademy.com. You can also email me at CoachSteeleFinance@gmail.com. Subscribe to the YouTube channel. Support. Go buy some t-shirts, buy some for yourselves, your family, friends, whoever you know. As I continue to push out this content and information to you, definitely patronize and go support. Let's see if I can give you all another example of the t-shirt. Boom. Make Money Multitask. I think that might be a gold color one right there that y'all are looking at. But definitely go to the website, and let me move that out of the way. If you need someone to come to a speaking engagement to talk about financial literacy, go to my website, fill out one of the speaking engagements requests as well. And so just let me know what subject or what areas. And I really like talking about budgeting when it comes to financial literacy and how to grow your wealth through assets and things like that, being financially responsible, getting yourself on the right track. You know, I don't mind talking about the basics. We don't always have to get super deep. Some of the things when it comes to financial literacy is learning the basics. Sometimes people want to figure out how can they get rich overnight, and that's not always realistic. And so when you learn the basics, the fundamentals, when it comes to finances, you learn how to grow wealth over a period of time. And the cool thing about growing wealth is it might take you 5 years to make $100,000, but just because it took you 5 years to make $100,000, from 1 to 100,000, if it took 5, the next time you go from 1 to 100,000 to make that 200,000, it doesn't take the same amount of time frame. It happens much quicker. Now it might only take 2.5 years. So now when you get from $1 to 100,000, if it took 5 years, and then from 100,000 to 200,000, 2.5 years, now you got 7.5 years and you got 200,000. But guess what? From that 200,000 to 300,000, it might only take you a year and some change. And so the speed of growing wealth happens very fast when you take your time and you learn to do it the right way the first time. Anyway, I appreciate all of you all for tuning in to Coach Steele's Finance Training. Make sure you go to the YouTube channel and subscribe. Let's run it up. The YouTube channel has a lot of great content and information on it. And you all have a great Saturday.